Here's how I caught a 10R trade on NFP Friday. So to preface this video, so here's the execution. As you can see, bought the low of the day, take profit, stop loss just below this low, take profit once NFP had hit. Now, to understand why I took this trade, we have to go back. So first of all, go on the weekly chart. You have to understand what is the current trading range. So this is GBP USD. As you can see, this would be the market structure low, and this would be the market structure high. Now, the only reason I have this indicator on is to mark out the market structure high and the market structure low. On the daily, there is other price points, but this is the main swing point. This is the low here. As you can see, prices started rounding off. We've had a break of structure to the upside, this being the high that broke the structure. So now we're in a bullish trend. Okay, the retracement started once we had swept or failed to close above this weekly candle here. So once we swept above and failed to close above, we are looking for lower prices. Now the target would be this candle low, and furthermore this weekly fair value gap. If we drop into the daily time frame, now coming up to Thursday, it was obviously NFP week, and so Monday's candle is accumulation. We accumulated, and then Thursday's candle we manipulated just inside of the daily fair value gap. Now we got here late in the day on Thursday, so Friday morning I'm thinking what could happen is we get a deeper move into this daily fair value gap, as I always like to trade off the 50% of it. When we get to the 50% of it during certain times, like London Open, then it's always a good time to sort of look for entries. Now we're inside of this area now, and if we drop into a lower time frame, I like to enter off the 15 or 5 minute. This is Asian lows, so Asia starts from 1800 and finishes at midnight. So this is Asia. This is not what I call accumulation because it's a downtrend, but it's sort of a tight range. Okay, as you can see, this is the 50% level, and once London opened, so Q1 of London is, it's not accumulation again, it is what I call X, so not entirely a quarterly theory setup. However, what is important is Q2 usually comes the manipulation, even if we don't have accumulation in Q1. Now this is not quarterly theory setup, this is sort of a discretionary model and my candle range model. So we manipulated, we've generated trend line liquidity here, price has manipulated, or known as a Judas swing, so the false move down. And what is important to note is obviously the correlated pair to GU is EU, and as you can see, EU was in the same area, so this is the daily fair value area. And what is important is that Asian lows, which was just here, there, Asian lows, and we had a similar price action, so we had a uptrend, quick move down. However, EU failed to sweep Asian lows. Now that is a bullish SMT. So if we've got bullish SMT, we expect reversal. So we've got two confluences. We're in a daily fair value gap area. We're in a London kill zone Q3. GU has swept Asian lows. EU hasn't. That's a bullish SMT. So now we're looking for entry. Entry wise, when we moved down and swept these lows, there was a 5 minute fair value gap here. Now this fair value gap was disrespected with a candle close above here. So as soon as we had a candle close above here, I'm looking for an entry off the inversion fair value gap. So this would be the entry point, move back into the inverse fair value gap. My stop loss would be at this structure low. Now take profit, and why this was a 10R trade. Even to Asian highs, this would be a nice 3R, so a great trade. However, we had NFP, and because of the higher time frame level, how we'd reacted perfectly off this 50% of this daily fair value area, bullish SMT and NFP, my first take profit was this equal high at 4R. But why my take profit was hit perfectly on this candle, and as you can see, all we're doing is we're looking for fair value gaps. So what I was looking for is, I was expecting that we sweep this candle and then we now aim for this candle high. Okay, similar to what happened on the weekly. Sweep this candle high, go to the candle low, but on the daily. So what I marked out 50% of this candle range, and so that was my main take profit. And as you can see, if we drop down into the 5-minute time frame, that is 50% right there. Okay, so if we mark out the trade again, enter a long position here, stop loss at the low, and the take profit basically at 50%, and I just aim for 10R because, you know, 50% is a couple of pips off. I don't want to be going above more there. It did hit, in fact it went a lot further, but 10R just about here. And this trade was very nice. Now, was it a risky trade with NFP? Potentially, because we was already at 8:30. I already took partials. My stop loss was at break even. Now NFP did move. Obviously, it's very fast. Sometimes your stop loss gets disrespected. However, it was a risk I was willing to take with all the other confluences. Such a bearish week, we was in a nice area. So yeah, this is definitely something you can use in the future. And the main takeaways from this is SMTs. During London, if GU takes Asian lows, EU doesn't, and you're in a nice high time frame key level. And even if you miss this inverse entry, there's a nice 5-minute fair value area here. The market structure was broken to the upside, moved down into the fair value gap, and then you could have had your stop loss at this candle low, and it would have yielded the same.